Hello to everyone. Today I am here with potential regulations for small and medium enterprises financing as Part-2. As we know that there are different sets of the potential regulations and small and medium enterprises is one of the set. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel, that is Financial Reality. Now, potential regulations from small and medium enterprises financing section. As we are aware that potential regulations are legal framework focused on the financial safety and the stability of the institutions and broader financial system. The regulations duly cater the unique features and underlying the risk of the respective business sectors that include large corporate financing, small and medium enterprises, consumer financing, microfinancing, and agriculture financing. Or maybe there are further regulations according to your country's financial sector. Further, one of the promising area comprehensive regulatory framework on the branchless banking is placed, which aims to provide the access to finance on the sustainable basis. Now, regulations from small and medium enterprises, all the relevant bank compliance should be aware about the bank SME specific credit policy. Because regulations are the minimum guideline, the financial institution itself can develop the conservative credit specific policy in order to cater their customers to minimize the risk related to their asset base. Bank and DFIs should ensure at least one yearly visit or act tried by the bank to be made to small enterprises borrowers business side. If finance is secured against the hypothecation of stock, bank and DFI should obtain the stock report at least semi-annually or as per bank credit policy. All facilities except those secured against the liquid asset. Liquid asset that may include the lien on deposit, any other type of security that is kept by the financial institution that can be recovered by the recourse of court, shall be backed by the personal guarantee of the owner of the sponsoring director of SME. Limit on clean exposure. First of all, you should have a clarity. What do you mean by the clean exposure? Clean exposure is the exposure that is not backed by any type of security. Facility secured solely against the personal guarantee on an SME borrower up to 5 million can be taken by the bank or DFI. Now, bank and DFI shall ensure that the loan has been utilized for the same purpose as specified in the loan application, because all the assessment on the loan is made keeping in view the purpose the customer has applied. Bank and DFI shall not take any exposure on an SME in which any of its directors, major shareholders, the major shareholders holding 5% or more of the share capital of the bank DFI or its chief executive, or an employee or any family member of those persons in interested. So if they have, it will consider to be the conflict of interest, and that is not permitted by any regulatory body. Loan document should be translated in national language to make it easily understandable to all borrowers. Bank DFI shall obtain ECIB report on their prospective borrower from the Electronic Credit Information Bureau of the Central Bank of the country. Or there are chances they may give the license to someone who is permitted to generate the same report. If it is so, they can get this report from that particular authority as well. Per party exposure, small enterprises can avail exposure up to 25 million for a single bank, DFI, or from all banks and DFI. Banks and DFIs are allowed to detect the liquid asset. So here, one thing we should have the clarity that a customer cannot avail more than 25 million per party exposure from all type of financial institutions. Audited report. Bank DFIs are not required to obtain the copy of audited report in case of lending to a small enterprise for the exposure up to 15 million. However, other tools will be used to measure the cash flows like management account, or they can also ask about their books of accounts. Normally, some informal sector, they maintain only on one side their sales and purchase accounts, or they maintain their cash books. So on the basis of that, you can develop your own cash flows as income estimation of the customer and their profitability assessment as well. Exposure above 15 million are subject to the copy of the financial statement duly audited by a practicing chartered accountant or a practicing cost and management account for analysis and record. So here one more thing is important. The auditor should be listed with QCR or whatever the authority in your country you have. So it should be listed that you will have to confirm about the ranking of the auditor and its listment with the body. Now here potential regulations for small enterprises, repayment capacity and the cash flow base. Repayment capacity may be measured by developing the cash flows from record containing in the sale and purchase book, and on the other side, cash receivable and cash paid record in remediatory form. So on the basis of this, you can assess the repayment capacity and by developing the cash flow base lending as well. Collector verification, valuation of the security for the loan above 5 million shall be done by only by an evaluator on the approved panel of Pakistan Banking Association or whatever the panel is approved by your central bank, you will have to keep in mind, whereas the facility below 5 million having the cushion that evaluating officer, bank evaluating officer can also go for the evaluation of the asset value. Recovery of outstanding dues, fair debt collection guidelines issued by the Banking Policy and Regulation Department. So you will have to follow. General reserve against the small enterprises, maintain a general reserve equivalent to 1% of their unsecured small enterprises portfolio that protect the financial institution's stakeholder in case of any type of bad economic condition. Turnaround time shall not take more than 15 days from the credit approval process from the date of receipt of the complete information. So the period is 15 years, but there is also required that all the information should be provided by the customer. Now here potential regulations for medium enterprises. First party exposure shall specially identify the sources of repayment, assess the repayment capacity of the borrower on the basis of asset conversion cycle and expected future cash flows. So here, on one side, you will develop the asset conversion cycle. On the other side, you will develop the future cash flows. Medium enterprise can avoid the exposure above up to 200 million from a single bank DFI or from all banks and DFI. Banks are allowed to detect the liquid asset. For example, if the facility is for 250 million and whereas the liquid asset bank have for 60 million, so they can avail the facility net of the liquid assets. Audited account, bank and DFI are not required to obtain the copy of the audited account in case of the exposure up to 10 million. Shall obtain a copy of the financial statement duly audited by practicing chartered accountant from the medium enterprises. How is a limited company or where the exposure of a bank exceeds 10 million for analysis and record? So it is the requirement for small and medium enterprises. Further, collector verification of the security for the loans above 5 million shall be done by only an evaluator on the approved panel of Pakistan Bank for Association, otherwise can be evaluated by bank or DFI evaluating staff, recovery of outstanding dues, fair debt collection guidelines issued by the Bank Policy and Regulation Department. Turnaround period shall not take more than 25 working days from the credit approval process from the date of receipt of complete information. Thank you very much. See you very soon with the other set of regulation.